put us back in balance and reduce the cash amount here, like so. And notice our accounting equation is adjusting accordingly as well. The assets equal the liabilities plus the owner's equity. You can also take a look at the financial statements over here and see how those are being built as we go. Okay, so then we're going to go to 10.6, and I'm going to take this, pull this over here, and we now have the company billed Easy Leasing $5,000 for services performed in installing new web browser. Okay, so it's cash affected. In this case, no, because we billed them. We didn't get the money yet. We like sent an invoice in the mail. So we didn't get cash, but we did work. And what did we get instead of cash? And we did get something. We kind of got an IOU. We got an IOU, and the IOU is the accounts receivable. So we still are expecting to get cash. That's worth something. We've done the work. We've earned the IOU, and the IOU is an asset. Assets have debit balances. People owe us more money, therefore it should go up. How do we make something go up? We do the same thing to it, which in this case would be another debit. So I'm going to put the accounts receivable on top here, 5,000, and we're crediting 5,000 to something. What are we going to credit? Well, why do people owe us money? Because we did work. And when we do work, we earn revenue or income. And the revenue account is down here on the income statement accounts, which are below the equity section. Revenue is computer service revenue in this case. That's the income that we have earned, even though we have not yet received the cash. We're going to recognize the income we earned when we did the work, not when we receive cash necessarily. We recognize it when we send the invoice out. Revenue has a credit balance. It only goes up. We're going to make it go up again by doing the same thing to it, which in this case would be another credit. We'll credit that, make this large again, and we'll post this out. So we're looking for accounts receivable, which I believe is down here. So there's accounts receivable, and P34 equals C20. C20, it's right there, and then enter. And then we're going to go to computer service revenue, which is going to be a blue type account over here somewhere. And we have computer service revenue. I'm going to go to AD22 because we should be in the credit side of it, equals, and we're pointing to D21 and enter. So now we are back in balance. I'm going to take this, I'm going to pull it over here. We're in balance because of debits plus this, plus this, plus this, plus this, plus this, minus the credit, minus the credit, minus the credit equals 0. Sums up to 0. Summing mean adding up the column. Okay, so now we're going to go to 10.8, which says company paid. Once again, I'm going to reduce it down to 1,007 cash for computer supplies purchased from the item above. So remember, we purchased these supplies up here. So now we're going to pay for it. And again, is cash affected? Before I get into that, is cash affected? Our first question. And it is. It's going down. How do we make something go down? We do the opposite thing to it. So cash is debit balance. We're going to make it go down by doing the opposite thing. We're going to put the credit on the bottom here. So we're crediting cash because we are paying cash for one credit of 1.7. Therefore, we're going to have to debit something. And the question is, what are we going to debit? Now, we did buy something, but we bought it in the past. And now we're going to pay off what we owe, similarly to us paying off a credit card. Where's the account that represents what we owe on the trial balance that we should have open anytime we do any type of work? And I see it right here. It's the payable. So there's what we owe. And is it appropriate that we debit it, which we already know because we credited cash? That makes sense because accounts payable has a credit balance. If we debit it, we're doing the opposite thing to it. If we do the opposite thing to something, that will make it go down, which makes sense because we do not owe as much money because we now paid it off. So I'm going to paste that. There's our journal. I'm just going to make this large once again. I'm going to go to the accounts payable down here, which is, I'm going to go to cell V41 equals, and then we'll point to cell C23 and select enter. So there it is. We took it down to 0. We no longer owe any money. That's nice. Then we're going to go to the cash, which we paid with, in cell R12 and equals, and point to D24 and enter. Okay, so then I'm going to take this. I'm going to pull it back over here once again. We are now on 10. Okay, so the company hired Lynn Addy as a part-time assistant for $125 per day. Now this is a little bit tricky because when we hire someone, there's no transaction, so there's no entry here. But of course, when we pay them, there will be a transaction. So there's no entry on that activity. Then on 12/12, the company billed Easy Leasing another 1/6 for services performed. So is cash affected? In this case, no, because we billed them. We didn't get paid yet. So we just sent the invoice out in the mail. You can imagine us sending our invoice out, which is a bill to them, invoice to us. And therefore, what did we get instead? Not cash. We got an IOU. They owe us money. So accounts receivable is an asset. People owe us more money. It needs to go up. How do we make something go up? We do the same thing to it, which in this case would be a debit. The debit generally goes on top, so we'll put it on top like so, 1/6. The credit will be also 1/6. What are we going to credit? Why do people owe us money? Because we did work and therefore earned revenue in this case. Where's our revenue account? It's on the income statement. Income statement is below the blue area. Here's our revenue account. Has a credit balance. And it only goes up. Revenue only goes up. If we do work, we can only earn money. We don't earn negative money. We do have expenses, which brings net income down, but we don't earn negative money. Therefore, we're going to make revenue go up by doing the same thing to it, which in this case is another credit, which we already knew because we debited accounts receivable. So let's make this large again and let's post this out. So we're going to go to accounts receivable, which is down here. Accounts receivable is going up in P35 equals cell C28 and enter. We're looking for revenue over here once again. So revenue is here. Notice it only has credit balances. We're going to say equals in cell AD23 and point to D29 and enter. And we see the revenue account went up here. We see it went up here. We can see that net income went up. So net income meaning revenue minus expenses. We only had revenue. We haven't incurred any expenses yet. Even though we have paid stuff, we haven't incurred any expenses because we have not yet used it in order to help generate revenue in the same time period, which is the matching principle. Okay, so now we're moving on to 10/15. Company received $3,000 cash from Easy as partial payment on its account. So remember, Easy's the one that we're selling stuff to, and is cash affected? Yeah, we received the payment. Cash is a debit balance. We're going to make it go up by doing the same thing to it, which in this case would be another debit. So we're going to debit cash for the amount of what we received, the $3,000. That means we're going to have to credit something $3,000. Why did people pay us? We did do work, so you would think maybe revenue, but we did the work in the past. We already recorded the revenue when we did the work. That's when we record revenue under the revenue recognition principle. Therefore, we're going to reduce the amount that they owe us. So the IOU amount, the accounts receivable, 6/6. So we know we're going to credit it. 6/6 has a debit balance in accounts receivable. If we credit it, we'll be doing the opposite thing to it, which makes sense because we need the amount that people owe us to go down because we're basically moving it from receivable to cash. So I'm going to copy that. I'm going to scroll down here on B32, paste it 1, 2, 3. Know we have to scroll a little bit more in this problem than in the prior one, but we're then going to go to cash in cell P13 equals the cash here, enter. So that brings up the cash account, puts us out of balance. Then we're going to go to accounts receivable down here, and that's going to be a credit. So see what happened, accounts receivable is going up so far. Then I'm going to go to R36 equals D32, enter. Accounts receivable goes down here. And we can see it goes down here, puts us back in balance. And let's see what we have next time. So now we are on 10/17, which says the company paid $1,000 cash to repair computer equipment that was damaged. So once again, is cash affected? Yeah, we paid it. So cash has a debit balance. We need to make it go down by doing the opposite thing to it, which in this case would be a credit. It's a debit. We're going to make it go down with the opposite, a credit. Credits go on bottom. Going to put that on the bottom here. That's a credit of 1,000. If we credit something, we're going to have to debit an equal amount somewhere. And what we paid for was computer repair. So if we take a look at the accounts up here, computer repair, and look through them, which we should always have something like this open, we see repairs expense. Even if you're in a problem that doesn't have a trial balance, look at an unrelated trial balance. The accounts won't be the same, but they'll give you a clue. So we're going to go to repairs expense. It's down here in the income statement. We have income and expenses. Expenses all have debit balances. They only go up. Therefore, we're going to do the same thing to it, in this case, which is another debit. We already knew that because we credited cash. Okay, I'm going to make this large. I'm going to post this. It's called posting from the journal entry to the general ledger. We're looking for an expense, which is going to be over here. We got repairs expense in cell AH30 equals, going to point to C34 and enter. Then I'm going to scroll up to the cash here. I know cash is here even though I can't see. And it's in R14 equals, and then point to cell D35 and enter. Okay, so now we're back in balance, and there's the effect here. Now we have net income. Net income went down by that because the expense went up, and so it reduced net income, which is the credit of here minus this. That's income, not a loss in this case. Taking this, pulling it to the side, moving to 1020, which says the company paid 1.5 cash for advertising published in the local newspaper. So is cash affected? Yes, we paid it. It's going down. How do we make something go down? We do the opposite thing to it as what it is. Cash is a debit balance. The opposite of a debit would be a credit. Credit's going to go on the bottom. And therefore, we're crediting the amount we paid for advertising. And so that means we're going to have to debit something for the same amount because we need an equal number of debits and credits in every transaction. Where do I see anything related to advertising? In our list of accounts, I see advertising expense. Expenses are all debit balance accounts. They only go up. How do we make something go up? We do the same thing to it, which in this case is another debit. So I'm going to say we're going to debit this. We already knew that because we credited cash. The expense going up will bring net income down. I'm going to make this large. I'm going to look for the, I'm sorry, I took wages expense. What I'm looking for is advertising expense. Advertising expense. Okay, so then I'm looking for advertising expense over here. It's up on cell AH9. And notice you might have to scroll around a bit. I'm going to hit equals, and I'm going to scroll down a little bit to find that cell. I'm going to scroll up a little bit so AH has equals C34, enter, to do that. Now you could just hard code the numbers, by the way, but I really recommend not doing that because if you're out of balance, this way you can see where it comes from by using these references. And that could be very helpful. It's good to practice that. Okay, so then we're going to go to cash. Cash is over here. It's going down in R15. R15 equals this account. That will bring the cash down, put us back in balance here. So make sure to check each time if you're in balance, and that'll help us to stay in balance. So I'm going to take this, going to pull this over here, move on to the 1022 transaction, which says the company received 1,000 cash from Easy Leasing, leasing on its account. So is cash affected? Yes, it is. We received cash, and cash has a debit balance. We're going to make it go up. We do that by doing the same thing to it as what it is, and therefore cash is a debit. We're going to debit it because it's the same thing as what it is, which will make it go up. 1,000 on the debit. We're going to credit something 1,000 as well. Now, we received it from our client, so you would think maybe the credit would go to revenue, to increase revenue. But, once again, we received it kind of on account. They're paying for work we did in the past. We recognize revenue when we did the work. We did the work in the past, recognized it when we sent the bill out. Therefore, what we're doing now is reducing the amount that they owe us. So accounts receivable has them owing us 3.6. That needs to go down because they have now paid us. How do we make something go down? We do the opposite thing to it, which in this case is a credit. So we'll credit that amount like so, make this large so we can post this more easily. And we are looking for the debit in the cash account. So I'm going to debit cash account here in cell P16 equals the cell C40, enter. Then we're looking for accounts receivable, which is in cell R37 on the credit side, equals the credit over here. And that will make the receivable go down, put us back in balance when we hit enter, like so. Receivable goes down, and we're back in balance here. Taking this, moving it to the side once again, scrolling down, and we are now on 1028, which says the company billed IFM Company 5,208 for services performed. So is cash affected? In this case, no, because all we did was bill it. Once again, we just did the work, we sent out the invoice. Cash isn't affected, but we did work, and therefore we have an IOU. They owe us money, and we're going to record that. So we're going to say they owe us money, and accounts receivable, the account represents people owing us money, has a debit balance. They owe us more money, needs to go up. How do we make something